Why are home sellers taking conventional offers over FHA, VA, or USDA deals? What's so much better about a conventional loan? Today I want to talk to you about government-backed loans, which are FHA, USDA, and VA loans. And as a home buyer, when you make an offer with that product, is your offer perceived weaker than a potential buyer with a conventional loan with conventional financing? And if so, what's so attractive about a conventional loan over a government loan? Welcome to our YouTube channel. This is Brandon Lewis here. I'm your local residential mortgage lender since 2002, and we love taking the pain out of the process as much as we can. And of course, we provide this YouTube channel to our clients and anybody out there that's looking to improve their mortgage experience, as we're always providing great tips, helpful information, anything we can that'll add value to your experience. As always, let's make sure we click that subscribe button. I want to make sure you're always getting this fresh information. Now, any article I referenced in the video, I will post in the comment section or the description sections. You will have direct links to anything that I reference here as well. All right, so we're going to dive into the numbers. We've got some interesting information that the Urban Institute made in a blog posting that they made recently. And the post reads, or excuse me, the statement reads, it appears that the current seller's market is having a negative impact on government-backed loans and the borrowers who need them. So what does that mean? What they're stating is that potential buyers who are using an FHA loan or a VA loan or a USDA loan may have odds against them based off that mortgage product when compared to a conventional loan offer. And if that's the case, why is it? The National Association of Realtors has recently released their 2021 loan type survey. Now, this is information that they collected between the dates of April 13th and April 26th of 2021. And they surveyed a little over 51,000 of their members and had a 6.85 response rate. So decent response rate, good amount of feedback from the members. Definitely what I'm seeing in the market as well. Let's jump into this report, see what the sellers are accepting and what they're not accepting, and then figure out what we need to do from there. In that report, in the 2021 loan type survey released by the National Association of Realtors, it states that a seller, check this out, a seller is 89% more likely to accept an offer with conventional financing than they are a government financing offer. Now, in the same survey, 30% of the sellers stated that they would entertain an offer with a government-backed loan, FHA, VA, USDA. So that's almost 3 times more likely to take a conventional loan than it is a government loan. And why is that? In the numbers, clearly it's happening. Sellers are absolutely taking the conventional loans over the government-backed loans. And let's talk about what are the perceived weaknesses of a government-backed loan. So a lot of times with FHA, VA financing, they're a bit more credit lenient programs, right? You don't have to have the highest credit score. You don't have to have the most money down either. Why are FHA and VA loans perceived weaker? Under the Home Mortgage Disclosure Act, data shows that flat out rejections of FHA and VA loans is having a negative impact or disadvantages on the following types of households. Any of these type clients could fall into this category. And again, these are clients I'm working with on a daily basis. So we see this. You know, people that are disadvantaged when a seller takes a conventional offer over an FHA loan. And why is that client maybe using the FHA loan versus the conventional financing? HMDA states that households with lower incomes are more likely to use the government-backed loans, lower credit scores. So generally it's stating, you know, because if you're using a government-backed loan, it may be perceived as lower income, less credit, less money down, less earnest money down. Yeah, these are all things perceived by the seller and what they believe is a weak offer or a weak mortgage product. Sellers are clearly accepting conventional financing offers over FHA or VA or USDA offers. Let's figure out what we can do to either get you into a conventional loan, have that perceived strengthness, right, in that mortgage product, and more likely to win. Keep in mind, 89% of sellers are more likely to accept that conventional offer and 30% of sellers may consider that offer with VA, FHA, or USDA financing. Almost 3 times more likely to have your offer accepted by a conventional loan. So, is your loan officer looking at all the best options for you and seeing if you can do a conventional loan to eliminate some of the hurdles in buying the home in this challenging market? There are actual differences between the government-backed loans and the conventional loans in the way that their rules work. One of the biggest differences is the home inspection requirements, or the home safety and hazard concern. A seller may be a bit more concerned if you're making an offer with an FHA, VA, or USDA financing, because they know they're going to have to face some stricter safety and hazard concerns on the home. For example, generally 3 or more steps, they're going to want to make sure that you have that railing on the steps there. Peeling paint on the exterior of the home, the peeled paint sitting in the mulch bed. These are all things that'll create little headaches and nuisances throughout the process when using a government-backed program that a conventional loan just doesn't have to deal with. That's just one. There are a couple other factors that go into consideration. As a government-backed loan offer, okay, so now you're an FHA, VA, USDA loan, you've made an offer on a property, it's been accepted, right? So you're under contract, and now the appraisal has been completed, but it came in $20,000 low. Now, do you want to buy a house that's overvalued or overpriced? Your real estate professional may advise you not to do that, and with these government-backed loans, you do have an escape clause. The home appraisal contingency will allow the potential buyer to escape the contract and retain their earnest money deposit if the home is appraised low. So again, that's an easy out for them. The seller doesn't want your buyer to have so many outs in the process. All right, now in that same situation, the other concern is the home appraises lower, you made the offer with a government-backed loan, and now that appraisal is attached to that particular property for 120 days. Anybody that comes forward and wants to use an FHA loan, if that's what you had, or a VA loan, if that's what you had, they're forced to use the same appraisal that you used that came in low and you decided to get out of the deal. So although the perceived weaknesses are not true, you don't have to put a lot of money down to buy a home. It's not a requirement. You don't have to have the best of credit. Not a requirement. But these are perception of the reality that the seller sees. All right, now the reality of it is they are challenging products when it comes to the property safety and hazard concerns. So if someone has a home that's less desirable and not in the best condition, they may have more headaches with a government-backed loan. Sellers are accepting conventional offers almost 3 times more likely than they are a government loan. It's true. So if you're an FHA loan, a VA loan, a USDA loan, sometimes that is just the best product for you, especially a VA loan. It's best for you to stay with that loan product. Now, there are other things we can do to add strength to your pre-approval and increase your odds of winning the offer. A couple tips real quick on that. Keep in mind, you always want to work with a reputable local lender. You're always able to look up a lender's employment history by the NMLS Consumer Access website. And again, that's your NMLS number, and that's a registered number that every loan originator must have. Grab their number, look it up. It has a 10-year employment history on there. If they're not a seasoned loan officer, you may want to move on. All right, so just to recap real quick, sellers are accepting conventional deals, conventional offers at almost 3 times more likely than they are to accept a government-backed loan, VA, FHA, USDA. It's crazy, it doesn't make any sense other than they're just trying to avoid some headaches on the property side of the transaction. So let's see if we can't convert you from an FHA loan to a conventional loan. Show that stronger pre-approval there. That's what we're seeing in the market right now. I'll always keep you updated here with current updates, but for now, the name of the game is to get into a conventional loan product as they're being accepted at a much higher rate than the government-backed loan. Thank you for visiting. Don't forget to click subscribe, click like, click the bell as well. Thank you for checking us out, and I'll see you on the next mortgage tip.